Well, I've said this for a long time, but there's no question in my mind that Bitcoin hits $1 million. There's no question about it. And by the way, I don't think it has to stop there. I think it could go a lot higher.
C-level advisor telling you that's a dumb financial decision, don't do it, is going to accrete to a firm. We are always on our consumer side, and now you will have an independent third party telling you, that's right, that's a really good deal. You should use that 0% from a firm. So first of all, incredibly excited about that future. I do think that e-commerce is getting remixed, if you will. You will now talk to your chatbot about what might hit your budget or your figure or where to travel, and you'll get real help, really thoughtful advice from an AI model that will naturally transition into a transaction. We're moving away from search-driven purchases for some things, not everything, to these chat-driven purchases and beyond. So very excited. Technology companies naturally gain from this shift because this will require build out of a whole bunch of new things, and we are a technology company.
So, Scott, it has been a rough August for Bitcoin. It's now given up all of its summer gains. And Ether, which started the week hitting a record high near $5,000, is now outpacing Bitcoin's losses since Monday. But zoom out, and Ether is still the outperformer, up more than 14% in August, while Bitcoin is down nearly 9%. Now, those corporate treasury stocks mostly took a hit this month as well. ETHZilla, backed by Peter Thiel and SharpLink Gaming, both Ether plays, falling in August. MicroStrategy, which tracks Bitcoin, also lower. The big exception here was Tom Lee's Bitmine Immersion, which is an Ether proxy trade, but it's up 37%. Now, on the institutional side, ETF volume has been light. Net inflows into spot Bitcoin funds at about $500 million since Monday. And then looking ahead to September, investors are watching macro data and hoping a mid-month rate cut could give crypto a fresh tailwind to trade on.
Well, AI is accelerating everything. So obviously it's accelerating also what attackers and adversaries can do. We're seeing that companies are trying to also adopt AI, and that creates even more risk for them, especially with the current state of security for these, LLM models. They are just not as primed for production usage. And I think this is where security becomes this, incredibly important pillar to ever get these solutions to be production grade. So these are things that we're absolutely benefiting from. Our AI offerings are designed to get folks to a secure adoption of generative AI. And I think that's part of the uptick here.
So researchers at Stanford are using ADP payroll data to track how AI is reshaping the workforce with a live dashboard showing those trends in real time. And right now, the hardest hit are workers under 25 and entry-level jobs most exposed to AI, fields like coding, customer service, and accounting. Now, the team told me that cutting these roles doesn't just hit young workers, it disrupts the entire employment chain. That same pressure is now showing up inside big tech. Our Jen Elias obtained leaked audio from an internal Alphabet meeting revealing that the company has quietly cut 35% of its small team managers over the past year. CEO Sundar Pichai was heard stressing the need to be more efficient as they scale to compete on nearly every front in the AI race. Now, cutting bureaucracy means faster decisions and quicker product cycles, what Yale's Tristan Botello, who studies organizational behavior, calls the great flattening, basically reducing those layers between top execs and builders. Now, that push is happening across the Mag 7. Meta's Mark Zuckerberg has spent the past 2 years stripping out managers while ramping AI hiring, and Microsoft has cut more than 15,000 workers this summer, partly targeting those middle ranks. Amazon CEO Andy Jassy is pursuing a similar shift, with Morgan Stanley estimating as many as 14,000 management roles could go, saving them $4 billion. And then here in Silicon Valley, I spoke to former Google HR chief Laszlo Bock, and he told me that hyperscalers are clearly cutting staff to fund their in-house chips and top AI talent. Remember, guys, those all-star-like comp packages can reportedly hit $1 billion per person.
I think that's incredible. Where's the pipeline of talent coming from?
On the AI talent side, I actually talked to Laszlo about exactly that. And he said that, 10 years ago when he was working under Eric Schmidt, they had already identified the 200 people. And this is a finite list of those capable of building LLMs and managing them. And then it became a strategy of how to recruit them, going to the same conferences and waiting till they have a bad day to swoop in and get them. But to your larger question about what's the pipeline for people to eventually lead the company, that's the big question here. Because if you're cutting those entry-level roles, and then with existing managers, you're kind of stretching out what they're capable of doing by augmenting their tasks with AI tools that make them more efficient. Perhaps with one manager, you can do the work of what was previously being done by three. We're starting to see these bigger efficiencies come in present day, but there is a question of who are they going to hire in 5 years from now to lead these teams?
Welcome to the Crypto Teacher. Don't forget to like and subscribe to the channel. And you know I come back with that video just to make you think. And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Eric Trump says Bitcoin is going to hit $1 million. And guys, we know a lot of people have these big predictions, but what do? That's right, we follow the Fed. Every bull run we've had, only thing we have to do is look at the Fed pumping money. And remember, the Crypto Teacher told you. And we have a firm CEO on chatbots. Yes, guys, remember, your life is an illusion and TV is your reality. And he said one key thing, a firm is a technology company. And they are not giving 0% interest loans for no reason. They are getting plenty of data. And due to these bots knowing all your financial information, they get to tell you what you shouldn't buy or should buy. Guys, it is unbelievable. And remember, these bots remember everything. So therefore, they'll know you better than you know yourself. And remember, the Crypto Teacher told you. Now we have crypto pulling back like the Crypto Teacher told you we would. And of course, there was a lot of hype boys saying we were going to keep moving up. But the Crypto Teacher gives you the truth, nothing but the truth. Yes, the truth hurts, but it sets you free. Now in crypto, we know it's still going to be pumping and dumping. And we know the times when crypto pump and dump. But also, we know at the end of the year, we always get a black swan. Now, we do have one great catalyst, and that are these crypto ETF approvals. But I just have a feeling they're going to wait for the beginning of the year. And remember, guys, 2026 is the last year that Trump can put his foot on the gas when it comes to this digital economy. Because basically you have midterms and we'll be back to the Hegelian dialectic. And remember, the Crypto Teacher told you. Now we have AI will be doing cybersecurity because we see more and more of these companies turning to AI. So who's going to know AI the best? That's right, AI. And remember, the Crypto Teacher told you. And we have AI taking higher management jobs and then also entry-level jobs. And I've told you on several occasions that 40 to 60% of this workforce will be taken over by the machines by 2029. And remember, the Crypto Teacher told you. And we have the minimis exemption expires for everyone. And guys, we know this is going to hurt small and medium-sized businesses, putting more pressure on them. And you know, I've been over this several times. If you're part of the Patrons, I've been over this earlier. And we know small and medium-sized businesses have no choice but to turn the cost over to the consumer. They don't have the same profit margins as these corporations where they can eat a little bit of it, but we all know they're not going to eat none of it either. But the fact is, at least they don't pay any taxes. But these small and medium-sized businesses not only pay taxes, but now they're going to be paying a higher cost. So they're definitely going to pass it over to the consumer. And the consumer is already under pressure. So again, this is just another step to destroy this legacy market so the digital economy can rise. Remember, Trump's job is to land us in his fourth industrial revolution. And remember, the Crypto Teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Now, the US ending a tariff exemption earlier this morning for lower value packages. The closing of the so-called de minimis loophole could disrupt supply chains for e-commerce companies, small businesses, and their customers. Megan Casella joins us now with more from Washington. Hey, Megan.
Hey guys, good morning. So that's right. This was nearly a century-old trade loophole. And while the president already closed it earlier this year for packages from China and Hong Kong, it's now eliminated for everyone. So that means that starting today, all packages coming into the U.S. are now subject to tariffs of 10 to 50%, or a flat rate of $80 to $200, depending on their country of origin. So it's expected to impact some 1.4 billion packages each year that used to come in under this loophole that's based on customs data. Now, the White House argues that this is necessary to cut down on drug trafficking and on counterfeit goods, but the change, which officials say will be permanent with no exemptions, will also mean higher costs, especially for U.S. consumers and primarily small businesses. Yale economists have estimated that closing the loophole will cost consumers about $11 to $13 billion annually, as much as $163 per family each year. And it could also mean canceled packages and mail delays, at least in the short term. So over the past week, countries including Mexico, Australia, Japan, several across Europe, you can see some of them on the screen here, they've all said they're suspending shipments to the U.S. as they try to figure out how to navigate these changes. E-commerce platforms too, Etsy and eBay, they've both warned buyers and sellers using their sites that they may not be able to rely on foreign postal services moving forward. Guys?
So Megan, I mean, it's kind of interesting not to see them move that much in the pre-market. They've been reacting to this move coming closer and the China-Hong Kong aspect of it already?
Yes, they have been. One thing White House officials told us yesterday in previewing this is that this shouldn't come as a surprise to anybody because they have been talking about it for so long. And given that the China-Hong Kong change did kick in back in May, almost half of all packages coming in under de minimis were coming from those two countries. So a lot of this is already baked in, but at the same time, I think there's still a big question about how implementation will go moving forward. If it's just a couple of dollars more per package, consumers can adjust, and that's what the administration says will happen. They also say these foreign mail services will have to make a business decision and essentially get in line and start adjusting to this before too long. But if there's a big hiccup in the near term, if everything starts to get a lot slower and a lot more expensive, then I think we might see more of a reaction.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. we have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, well, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. We will, and if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're going to get more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and you know, when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Crypto Teacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. From COVID 33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.